But what about that capriciousness? Because, I mean, you don't know. I mean, I don't know at least where they might wake up then tomorrow morning and decide, well, we want to go after that industry.
Yes, and that's quite unnerving. The one that makes us most concerned was what happened in the for-profit education sector. The government, after many announcements, there was plenty of harbingers that indicated the government wasn't satisfied with it, but they made them non-for-profit. That is severe and jarring, and we understand the investor response. But there are some great companies in China that have such extraordinary balance sheets that they can pay fines to the regulator, they can make acquisitions, they can ultimately return a lot of capital to shareholders. Companies like JD.com or Baidu in search, as well as in AI and cloud, that if you can just get through this period for investors, just don't look, just own these companies because they will be great in the future. It's just very hard when there's so much negativity, especially in the press. And that's part of what we do. We take a much longer time frame in how we invest. But that is one area, China. And another area that's really interesting, you didn't ask me about, was what in the cyclicals hasn't rallied, and that is memory semiconductors. Those stocks have been a real drag for our clients here to date, and yet they're phenomenal. A consolidated industry, high barriers to entry. It's an incredibly capital-intensive industry, and the amount of memory chips that are used in our very data-intensive economy is skyrocketing. The demand is going to be higher than we've ever seen it. So even with the increase in supply that's inevitable, we are convinced there will be so much need in mobile communications. The new iPhone 13, much more memory intensive, in AI, in electric vehicles, any kind of autonomy, smart cities, smart factories, so much memory needed. So in that respect, that's another place to go that should, we think, be somewhat resilient to this diminishing amount of liquidity that we expect ahead.
So if there's potentially surprise upside to some of those memory semiconductor giants, as you refer to them, what's the market fail? What are you seeing that the market's missing?
My colleagues and I think the market is very short term and is looking for a downturn in price in the first quarter of next year, and maybe not looking beyond that, which is there may be a downturn in price. There's always a cycle in these. And in the past, they've been very severe cycles, like big swing up and a crash downward. So you can certainly understand why investors might be hesitant. However, the balance sheets of these businesses are fantastic. And because I mentioned earlier, they've consolidated, there are fewer competitors. And as a result, that creates something called discipline in how they add supply. So this cycle should look very different from prior, which means these stocks won't sell down to book value and then go rallying up again. And that's the more consistent performance that we like to see out of stocks, especially in technology and the more cyclical, economically sensitive part of technology.